Welcome to the Tax Saving Minute. This is the show that teaches you how income taxes work in little bite-sized pieces so you can learn how to save money on your taxes. In Season 3, Freelancer Tax Freedom, we're talking about how you can save money on your taxes if you own your own business. In these special advanced bonus episodes, we're going to delve a little deeper into some of these more complex, deep concepts to help you understand business entity type and some of the other things you need to know to be a successful business person. So if you don't want to miss out on future episodes, subscribe to this channel. And if you want to be successful in business, then like this video. Today, we're going to talk about two different business entity types, Schedule C versus S-Corporation. So you could have either one of these if you own your own business. If you file a Schedule C on your 1040, it's when you own your own business and that business is not a corporation. So if you're not a corporation and you're just an LLC or not even an LLC, just your own business, then you will put all your income and expenses on your 1040. Now, there are pros and cons to this. The pros are it's really simple. You have one tax return, one entity. It's you. And you don't have to mess with payroll if you don't have any employees. So you don't have to do payroll for yourself, which is super simple and really nice because payroll can be a pain. But the downside of not doing payroll for yourself is that the net income, which we talked about in another episode, what net income is. It's your total minus all your expenses. Total income minus your expenses is your net income. That net amount, you get to pay all the self-employment taxes on it. Yeehaw. Which really you don't want to do because that's a lot of taxes. And if you want to learn about what those are, then click the link below for Season 3, Episode 1, where I talk more about that. So, that's the downside of having a Schedule C on your 1040 is you have to pay self-employment taxes.
What is an S-Corporation, or S-Corp for short? An S-Corp is an entity separate from its owners and that files its own tax return. To be an S-Corp, you must first be an LLC or a corporation under the laws of your state. Then you must elect to be an S-Corporation at the federal level for federal tax purposes. As an S-Corporation, your business doesn't usually pay its own tax. Instead, the tax flows through to you as the business owner, and you report the income and deductions on your own tax return. This net income flowing through to you is usually not subject to self-employment tax. What are advantages of being an S-Corp? Well, number 1 is potential savings on self-employment tax. Number 2 is flexibility of ownership. What are some disadvantages? Number 1, you have to file a separate tax return. And number 2, you have to run payroll and file payroll tax forms. How do you know if the IRS sees your business as legit or a hobby?
Join me in advanced bonus episode number 3 to find out.
Thank you for joining us for the Tax Saving Minute.
If there's something you really want us to talk about in the future, please comment below.
I am Aaron Lerma, CPA.
I'm Cynthia Umstadt, CPA. See you next time.